Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar captured the crucial resistant level overnight of 69.45 and now looks towards an objective of 70 to 71 cents. Meanwhile, the US dollar, which measures the greenback strength against a basket of six major currencies, plummeted after the inflation data released saw the dollar slip from 103.05 to 101.79 and now settles near a 7-month low of 101.90 and still has the objective at this stage to 101 figure 50. Global markets cheered overnight following the release of the December tamer than expected consumer price index, adding to evidence that the price pressure has peaked, therefore supporting the view that the US Fed could slow the rate hikes in the up-and-coming meetings. The Consumer Price Index, which measures the rate of change in price of various goods and services in the United States, which is seen as a key indicator for measuring inflation, came in at 6.5% on an annual basis in December, in line with market forecasts and lower than the previous release in November of 7.1. In light of that, the market has found renewed strength, and as you can see by the engulfing candle, has added further to the case that we could see further gains. Any pullback looks towards 68.80 as a short-term support. Looking at the euro, the market is holding relatively firm as it reaches its first objective, which was at 108.40-60 area. From there, the market is expected to climb further and look towards 109.45-65 as the initial target, and if so, could see that rejection from there and therefore look back towards the support scene around 107.45-80 area. The dollar yen, well, after the inflation number, the market crushed the level of 130.40-60 and now looks towards a region of around 126.65-75. Any advancement should find resistance roughly around 129.40-70. With an engulfing candle posted, it is expected that sterling should regain further momentum as the painful high inflation that has been the centre of the US for more than a year and now favourable of trending in the right direction as lower may convince the US Federal Reserve to downshaft the size of its rate hikes, and that would ease some of the market's concerns and therefore give a further light US dollar and strengthen other counterparts. So as I mentioned, looking up to 122 to 124 for sterling, with any pullback likely to be shallow, with a support seen around 120.75. Gold briefly touched a fresh 8-month high of 1,900 before backing away. It is assessed that as we get closer towards 1,904 to 12, may find a little bit of difficulty as we are overheating when it comes to the RSI and also the ADX, and therefore could see a pullback to anywhere to 1,888 and a short-term base around 1,875 to 77. Wrapping up with oil, well, the market did nudge slightly higher overnight and getting closer to its objective, anywhere from $79 to $81 a barrel. And any pullback should now find support roughly around the region of 76.45 to 55. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the great start to the wonderful new weekend.